why every state has their own regulations in this industry. How did you make that move? What was the thought process behind moving from KPMG to the corporate finance side of the world?
Ultimately, the role of CFO is a combination of making sure that the company can see around the corner in all aspects.
Gross profit. Treez, Wampley, Rike. Who has the best gross profit?
I have found my calling in helping growth startups scale, companies that have raised a substantial amount of money that are navigating their business. Overall capital raised to date at Treez is about 79 million, and we are proud to be a leader in the industry.
Hello. Welcome to the Strategy of Finance podcast, where we celebrate the profession and the professionals in the world of finance. We endeavor to unpack their journeys, to understand what moves them, get inspired by their triumphs, learn from their experiences, and most of all, connect with them at a personal level. In today's episode, we are venturing into the unknown and obscure world of cannabis tech. Cannabis, which is more popularly known as marijuana, has a market size of over 33 billion by the end of year 2023 in the USA and is expected to grow to 67 billion in the next 5 years. I'm excited to be joined by David Yan, the CFO of Treez, which is a leading player in the cannabis tech space with over 15% market share. David has an amazing journey so far and is an expert in SMB SaaS, given his time at leading companies like Treez, Wampley, and Wrike. Amongst other topics, we'll dive into this journey, explore cannabis tech as an industry, and unpack SMB SaaS with its nuances and metrics. Let's end the wait and listen on to learn, grow, and inspire. Hi, David. Welcome to the show. Super excited to have you on board.
Thank you, Rohit. Super excited to be here. Good morning.
Good morning. Awesome. Why don't we kick it off with a little background on you? So tell us, how did you make your foray into this world of finance and became a CFO?
Yeah, I don't think I started out when I was in college. If I can go all the way back then, I don't think I started out with the perspective that I would end up in the world of finance. I firstly, I was incredibly interested just in university studies in economics, and I studied marketing. I dived into marketing. I dived into a little bit of finance, a little bit of accounting, and was sort of just intellectually interested in a lot of different topics, and I knew I wanted to make some dent in the business world, but was, like many young people, was just trying to figure out, exactly how I would impact that. And, I went to a state university based in California, and was sort of trying out a couple different internships, some in finance, some in marketing. I had the great opportunity to work for several startup accelerators, actually, which kind of got me intrigued in the startup world. And but I wasn't an entrepreneur at the same time. So really, I found my way in, and at the time, it was sort of early mid 2000s. There was a lot of hiring that was being done in the accounting side of the world, specifically on the public accounting side. The Big Four. Actually at the time it was the Big Five that just shrank down to the Big Four just because of Arthur Andersen. And what I found was that I had seen a lot of people build really great careers coming out of the public accounting world, but I didn't, internally. For me, I didn't necessarily feel like a pure accountant, right? And unlike a lot of people that had planned their public accounting journey very early on in their studies, I sort of made the decision quite a bit later, maybe my senior year of college. And after a number of internships, I sort of thought that I would take a path of ultimately corporate finance, but that the best entry point into that, not coming from an Ivy school where you're typically looking at investment banking type of consulting jobs, but coming from more of a state university, I thought that public accounting would be a great path to affect that. There was a lot of hiring, as I mentioned, and Sarbanes-Oxley was full in effect at the time, just coming up and ramping as a result of just so much corporate governance change that was going on. I think that part of it and the regulatory side of it was pretty interesting to me, and I saw some of that start to take shape in a few of my internships. So, went out and interviewed with all of the four large accounting firms as well as some corporate, and ultimately started my career the traditional way at KPMG in audit.
All right, very cool. It's interesting. Not many people realize these mega shifts in whether you think about regulations or governance that comes in. They really have a huge impact on the job market.
Oh, absolutely. I think the the year that I started, they probably hired a class of, I want to say 80, 90 people, right? And out in the Bay Area. And, there's two offices in the Bay Area. I ended up starting in Mountain View, just right at the epicenter of all the tech activity. And, but what actually kind of overshadowed even some of just the startup activity, the IPOs, large public companies, large big box software companies that you typically see in the Bay Area, was just at the time so many companies were going through transition to Sarbanes-Oxley, transition to hire more visible and transparent financial reporting standards. They were moving toward, some of them were a little bit behind the curve, and some of them were standard setters in that sense. And then we were also coming out of a sort of awkward economy, just because between 9/11, the war in Iraq, number of other things, the dot-com bust, which preceded that a few years earlier, right? Things where Silicon Valley was kind of still coming back out of everything, and then we get hit with all this governance. But it was very fortuitous for me because that class, and I'll say this admittedly, like as I mentioned, I didn't start out my career thinking that I would be a pure accountant, and that's the sort of model archetype that the Big Four looks for. So when they went out and they hired a class of like 90 people, and it probably would have been something closer to 60 or 65 had it not been for all those regulatory changes and just the demands of the clients at the time. I'm a major beneficiary, of that whole regulatory wave that took shape during that time. And I'm really glad that I started out my career at such a large firm with really such high standards for excellence across the board. And even though accounting is probably a fraction, just a subfraction of the CFO's job today as a modern CFO, I still rely a lot upon just the standards that I've learned there. Not from a technical standpoint, although that always helps, but really just from the way I approach my job, the way I work with people, the way I collaborate with others. It says a lot in terms of how I think through my work ethic, how I think about highs and lows. And it was overall a very good experience as just early in my career.
Makes sense. Can you tell us a little more about your time at KPMG? You were based in the Silicon Valley, right? So were you exposed more to the technology companies, or it was a mix of other industries as well? And what kind of really you learned in that time?
Yeah, yeah. Well, it was almost exclusively technology, probably 95% or so, right? I think what as I mentioned, I when I started out, every company was going through the Sarbanes-Oxley side of things. It was that while that helped me get the job, just because of the hiring inflection. I don't think that was my main interest area. My main interest area was really just understanding all the different challenges that companies were going through as they navigate. If you were working with a larger company, maybe they were navigating their revenue recognition transitions, compliance standards. If you were working with a smaller company, maybe they had broader ambitions down the line for IPOs, transactions, capital raises that really really forced them to take a hard look at how they were governing themselves internally, how they were building out processes, how they were building for scale. How forward was the CFO thinking at the time? Were they thinking 1 year forward? Were they thinking 3 years forward? Were they thinking, right at the moment, just because they had to? What was sort of the perspective that each company was taking, and you get such a broad mix of clientele in different stages of their own company life cycle and stages of their own internal teams. And overall, you know, as an early professional, it's something that you can still reflect on years later as you think about your own leadership journey, as you think about your own company journey. Just because you see so many different things. 1 year you might be in the middle of a very strong capital market. Another year it might be down. Regulations change. I'm personally in a very highly regulated environment today, and it's a very interesting business, right? So overall, you sort of learn the sort of hard business skills, and then at the same time you learn a lot of the soft skills, because business is ultimately about people. And in the CFO seat, you have to go way behind the numbers, and you have to get down into the operations. You have to get down to the people. So learned a lot about building relationships and ultimately leadership at the same time.
Makes sense. What made you then move from KPMG to the corporate finance side? And especially when you mentioned sort of a broad repertoire of companies and clients that you were working with, a lot of interesting people that you get exposed to. And I was sort of in a similar situation on the investment banking side, and then moved to corporate. And it took me a while to reset my mind to be able to just focus on one single company 24/7, right? And so tell us kind of both, how did you make that move? What was the thought process behind moving from KPMG to the corporate finance side of the world? And then did you have to make a similar adjustment that kind of I alluded to right now?
Yeah, and I think my perspective, if I go back, a couple of years, well, just knowing that corporate finance was ultimately what I wanted to do. I think I sort of mentally prepared myself for that transition years ahead of actually getting into a corporate finance, or sort of financial planning seat. And really, it started with just a desire to broaden my perspective and my operating experience and take finance from a general management standpoint, not a compliant. You can look at it from a compliance standpoint and a regulatory standpoint, which is essentially what coming from the big four is about. But if you ultimately want to influence the strategy of the business, and you want to influence the outcomes of the company, then you're going to have to get into the operations. You're going to have to understand the strategy. You're going to have to go down into the model. You're going to have to go down into how you actually affect change and decision making within a company. So I was really looking for a company where I could do that, and I didn't want to pick a very early stage startup, because that's kind of too much. You're kind of spread a little bit too wide, and you might not go deep enough. And I didn't want to go into a very, very large, Fortune 100 either, which is actually the path of a lot of Big Four alumni. Just because I didn't want to be boxed into some role where they're exclusively hiring me out of KPMG for my skill set that I learned there, whether it be working as a revenue recognition accountant, or whether it be working in treasury or some other area. Usually larger companies have multiple facets of the global finance organization. So looked for a mid-stage growth company that was in the ad tech space at the time. They were actually my client, so I kind of knew them. I knew the CFO's operating style, just because I had always enjoyed and sort of in some ways even admired my interactions that I had with him during my time as an auditor. And I really saw in him that finance leadership from a general management standpoint, not a banking standpoint, not a compliance standpoint, not a pure transaction standpoint, but really somebody that covered all grounds very well, and had a big hand in company-wide leadership at the same time. So, this person is somebody that I have in some ways over time tried to model my own approach off of, at least early on, and then you sort of take your own style and approach, and navigate that, as you get further along the journey. But at least early on, he was somebody that I really watched very closely behind the scenes. And so, when an opportunity came about where where I would be able to provide the company with the guidance that I had provided them when I had been at KPMG and they had been my client, and at the same time build that finance from a general management standpoint, from reporting to analytics, FP&A, operational type of finance, and really wear a lot of hats. And did that for a couple of years, and I felt like that kind of rounded out my profile. And by the time I had gone through all that, I was probably maybe 4 or 5 years into my career, and I felt like that sort of like 3.5 years at KPMG plus another 1-2 years in a corporate setting where I was able to round myself out pretty well. I felt very good about the experience that I had gotten there. Just given that they had gone through capital raises, they had gone through some ups, a lot of ups and a handful of bumps along the road as well. So helping to navigate that.
Makes sense. And since that first foray into corporate finance, you have been at companies like Synopsys, Forescout, Twitter, Wrike, Womply, a good mix of large scale companies, relatively smaller companies, public companies, private companies. So tell us a little more about how did you pick and choose, or was it more just organically how kind of those transitions happened, and what was it to work in more of a public company setting versus a private setting?
Yeah. As far as picking and choosing and how organic were things, a little bit of a mix of both. Opportunities come your way during your career, and they're going to present ways in which you can put yourself outside of your comfort zone. So, that's number one. As if we're talking about a path to ultimately being CFO, putting yourself outside of your comfort zone as many times as you can within the first, call it 5 years of your career, right, is tremendously valuable. Now, you're going to take a little bit of risk in doing so, because you're learning, right? But I think just putting yourself out there, shedding the sort of risk averse side of the persona that typically comes with a most people in finance, just to put it's a little bit of a bad stereotype, but there's a little bit of truth to it as well. And that risk aversion protects companies, but I don't know that it's the best decision for your career. So number one, just to reiterate, putting yourself out there, putting yourself outside of your comfort zone, and multiplying your resume over time. Get that multiplier effect inside your resume. It's okay if not everything works out exactly as you plan, but you have to learn a lot along the journey. And I thought about it from the standpoint of, CFOs have to navigate. If my ultimate goal at the time was CFO, which by that time it was, then what situations do I have to put myself in? What stages of companies do I need to see? What type of transactions do I need to get myself exposed to? And what type of decision making do I need to expose myself to as well? And that really guided a lot of the different roles that I had taken over time, from mid-level through senior management ranks and the different roles that I had taken. So, starting with some of those companies, right? Working in a large public company like Synopsys, I had an opportunity to do do a combination of SEC reporting, and we also had an M&A sort of advisory function, and they were highly acquisitive of a company. So a little bit of exposure to the transactional side as well as the reporting side. But it's a larger company, so as I mentioned, it's a lot of different facets of the finance organization. You sort of it comes with the territory. You see the rigor and the discipline of really excellent processes, but earlier in your career, you're going to be a little bit removed from a lot of some of the more bigger picture corporate finance type of things. So I went back to a growth company ultimately where I felt like I was most impactful. Worked on an IPO transaction, had an opportunity to write an S1. And, I found that a lot of those early jobs that I took, it was the first time that I was doing something. For instance, in the ad tech company coming out of KPMG, it was the first time that I had worked in finance from a more general management standpoint than a pure compliance one. When I worked at this network security company, Forescout. It was the first IPO transaction that I had directly been able to work on, and I wrote a good amount of the S1, and just helped the company with its processes and its discipline across readying for that initiative above and beyond that. Um, when I went to Twitter, they were just coming out of their IPO, and most companies spend a good amount of time preparing for the IPO and getting really mature internally, and they were, but at the same time, when there's a multi-billion-dollar transaction on the table, the companies move as fast towards that as they should, as they reasonably can. And so, post the IPO, there's still lots of work to be done. Was responsible for some of the North America accounting functions, and had an opportunity to build on people management and process development as well as just overall leadership. But ultimately, I have found my calling in helping growth startups scale. Companies that have raised a substantial amount of money that are navigating their business, and that opportunity came for me probably sometime in 2014, 2015, when when I when I was put in touch with a CFO who was kind of who was their de facto COO, and then probably later on in the journey, maybe 6 months into the journey, he became COO and CFO. But he was running a number of different parts of the organization, essentially everything outside of some aspects of product and engineering. So very commercially focused, and that sort of profile of a CFO who was also a COO was a big draw to me, because it would give me the opportunity to take on the entirety of the finance function, and from FP&A, finance operations, treasury, and traditional controller functions. And I knew it would. I just knew that it would set myself up for a path to CFO over time, just because of the wide span combination of the wide span of ownership, and the very broad focus that the CFO COO had at the time. So the person placed a lot of trust in me, saw that I was able to execute on a number of things at other companies, you know, without necessarily having gone through it several times before, because I was still relatively early in my career, probably mid career, right? But took the chance on me, and that's that's a lot of what you do as a CFO as well. When you're building your team, is you you want a certain level of certainty in what the person can bring, but you also take a chance in people, and you also make a big investment in developing people. So I in addition to the hard skills that I learned there, that was another thing that sort of was a very good takeaway from my experience working for this person, is just just how much trust you can put in people, and how much you can, and what your role is in making sure that your team succeeds. Because ultimately, in a growing and scaling company, you really can't do this alone. But so when I was put in that position, the company was probably, I want to say, like 300 people at the time. By the time I left, and ultimately at the exit, there were probably 600, maybe 650 people. We had been growing at a pretty good clip. It was a SaaS business model. Firstly, starting, they started when I started. They had a very inbound sort of transactional business approach, transactional high touch funnel, right? And then over time, they migrated into the enterprise sort of market with much larger customers. So helping to navigate the company through that transition, and unlock several different vectors of growth paths for the company, as well as build a finance team that I'm still very proud of, and many are still there today. That supported such a large organization that was growing at the same time. So it really gave me the opportunity to not only build the team but anticipate needs years in advance, not go way ahead of scale, just because finance functions tend to be lean, and you don't want to over process a company beyond its maturity, but you never want to fall behind either. You always want to be ahead, but you actually don't want to pull it too far ahead. And so navigating that balance was also another sort of great learning from my journey at Wrike.
Very cool. Tell us, did the Vista transaction happen while you were there, or it happened after you moved to
Yeah,
Woodley?
so we went, we had done a handful of capital transactions. I had joined after their Series B. We had done some credit and debt rounds as well, which helped us navigate really the cap table very well. And the company was growing, and it was managing its burn. So it was opportune for us. And there was, we were always viewed sort of as like number two in the space, right? Maybe number three. There were a handful of, I think there was, if I reflect on it, there was one IPO at the time. There were some large capital transactions, and there was always a healthy amount of private equity interest in Rike, as well as strategic opportunities. But ultimately the company exited to Vista Equity Partners. That you know my next journey after that was with a company called Womply, which was a growth company, but they were PE, they were PE backed by Sageview Capital. What was very, very unique about Womply is just that in some ways they were able to make SMB SaaS businesses work very well. And just from a from an operating model standpoint, a lot of entrepreneurs and a lot of software companies sort of shy away from the SMB market, just because the economics, the unit economics, as well as the total economics, are very hard to master. And the reason that is because churn is typically very high. Small businesses, tend to go out of business at a faster clip, and they tend to view software purchases very transactionally. So the long-standing relationships are not always there, and the and just at the price points, it's easy to switch. So if you think about traditional SMB, or their churn tends to be higher than average. Cost of customer acquisition tends to be, it's either very predictable or it's very unpredictable. And it can take a good amount of finessing to work. But this company Womply, they had a mission to serve a really horizontal scope of small business owners, their addressable market is probably you know over over a million small businesses within the U.S. So a very wide TAM and very wide distribution. But we nailed the economics, and that was really critical to that company. That's I so I brought with myself by this time in my journey. I had worked with high growth SaaS companies that had both spanned SMB as well as enterprise, large transactions, right? And really everything kind of in between and the inflection point and the sort of transition point, excuse me, as you go through from one to the other. But it's the SaaS is like I've also had the opportunity to see the SaaS business models evolve quite a bit, just over the course of my career, and it's been quite interesting.
We'll certainly touch a lot more upon the SMB SaaS dynamics once we talk more about trees. But why don't you tell us how the move to trees happened and maybe introduce trees to the audience?
Yeah. So Treez, we are the technology platform and backbone of the state legalized cannabis industry. So cannabis is legalized in 39 or 40 of the 50 U.S. states, and there are probably 24 or so of those are like recreational markets, and then the remainder are either medicinal or some combination of recreational and medicinal. And it's a really intriguing industry. One firstly, it pulls me way back to my roots of just being in a very, very highly regulated industry, but in a different way, because you have to remember it's regulated at the state level. The industry has been around for the state legalized industry has been around for well over a decade, but each state market is very, very different. It's dynamic, it's changing, it is it is interesting at many different levels, intellectually, operationally, and culturally, right? It it's so there's an element of fun, and it also requires a high amount of grit, is what I would say, just because the industry goes through so much change. And my job as CFO, which is my first CFO position, which I've been in the seat for just about almost 5 years, going on 5 years now, right? But it's overall a fascinating company. We serve the retailers in the space. There's approximately 8,000 retailers in the U.S., ranging from very small businesses to large, multi-state, multi-store retail operators that span across the country. Some public, mostly privately held businesses. And but to your question, as how I ended up here, right? You know, I I took a call. It was I was intrigued by the opportunity. I had been in a very heavy VP of finance seat twice, where I had owned finance and a little bit more for two times. I had both in both cases. I had worked for a CFO who was also operating as the COO. Today, one of them is a CEO, and so that gives you a perspective of the type of leader that I throughout my career, that I had always wanted to work for and learn from. And I just felt like I really felt like it was my time to take on the challenge. I've been in the position for 5 years, had an opportunity to do two capital raises for them, to see the company through over 5x of growth, execute upon a few transactions, as well as really get into the operations of the company. So that's sort of the internal side of it. But what intrigued me about the opportunity was the emerging industry, the fact that they too have to make small business SaaS work, that they have had and since has materialized a very major data component, data assets that are core to the company, and that their vision was a little bit broader than SaaS. We have a combination of SaaS and fintech. Payments in the cannabis industry is very complex. It's very highly regulated, and but it's also a very meaningful pain point for retailers, and it's a very meaningful recurring revenue stream for Treez. So it really serves the industry very well across the board. So when you combine sort of SaaS, fintech, data, right? I felt like the business model was compelling. The market opportunity is compelling. It's incredibly tough to figure out, and I think I'm very proud that we're one of the companies that have sort of figured out exactly how to navigate across this market. But it has incredibly high barriers to entry. I think what's so unique about the company, outside of the fact that we serve cannabis, which is still intriguing to some in 2023, right? But is just that when you look at a traditional startup opportunity, like let's say I go back to the first startup that I worked for, which was in ad tech. Conversations are always like, okay, well, when is Facebook going to do this, or when is Google going to do this, or when is some very large player going to come do this, right? I think we are in cannabis. We don't really have a whole lot of conversations on a day-to-day basis about when is Oracle or when is NetSuite going to come in and build ERP for the cannabis industry. I don't think that, I wouldn't say that they would never do that, right? But it's not. But that overhang of that day-to-day overhang of a threat of isn't as present. And we're very much a startup industry. All the cannatech companies in this space, which interestingly, there are some public companies, but nevertheless, they are all I consider them to all be startup and growth companies. We have hit a certain level of scale, and we have hit a certain level of maturity that we are continuing to build upon and grow. But we're still very much in the startup market.
Very interesting. So, if I understood the product accurately, so it's basically a CRM plus a financial management ERP solution, plus, of course, the front of the reception fintech checkout solution, all packaged in one, specifically for the cannabis retailer.
That's a fair way to articulate it really. We're a point of sale, right? We're a point of sale first at our core. What we do is we help our operators manage their business. So we provide the technology platform. That's the point of sale. It's the fintech. We have some elements of e-commerce. What it is. It is also an ERP light, and we have tremendous data assets and retail analytics that help retailers operate their business. But when I say point of sale, most people think the first analogy you'll go to is like, okay, is it like a cash register? Is it just like Square? And it's a lot more complex than that in our industry. First, just because of the regulations, every piece of inventory has to be tracked and traced through the system. Every record has to be kept. Detailed records have to be kept and reported up to the state because it's a state regulated market. And so there's a lot more compliance to the point of sale than a traditional cash register. So it's much more than that. I think that's the sort of first notion I try to dispel when I tell people what we do is if they bring up like cash register, when you talk about point of sale, it's so much more than that. But for simplicity's sake, we can call it a point of sale. and but it's ultimately the technology backbone behind how a retailer operates their business.
Very interesting. Um, can you give us some flavor in terms of why every state has their own regulations in this industry and there is nothing at the federal level? Is it all just politically inspired or there is something else to it as well?
Yeah, and well, a mix of both. Well, firstly, it's there cannabis is state legalized today, so we are in a position where the federal government still considers cannabis to be a Schedule 1 drug. Which what that means is that it's going to be classified with the worst substances that can be out there. There are proposals in place for that to be reclassified, and we hope to see some movement soon. But at Treez, we really operate our business to help our retailers across the regulatory environment, no matter what state it's in. And right now, it's at a state regulated market simply because it's not federally acknowledged. And so, the each state will take their different approach for how they want compliance to happen, how they want legalized sales of cannabis to happen in their market, and so we help our operators comply with that in a seamless way, and help them so that they can focus on their business. Highly regulated market overall, and unique by state. I think that there are some states that are more similar to each other than others, and that in some ways makes it a little bit easier. There are very good frameworks out there. Like, for example, in California, we have close to 40% of the overall market share, and that's the largest legal market in the world. We have significant market share in a number of other states, and we tend to, as an approach, we tend to go in and dedicate ourselves to very important states. Tend to focus on TAM dynamics, ideal customer profile, the economics of the economics of each state, as well as make sure that we have really, really good product market fit in the markets that we operate in. And so, that's all part of the journey that we have to navigate as a growth startup, which is to figure out the capital investment and the long term investment thesis for each of the markets. If you kind of in some ways go in too early, the economics might be difficult. The regulations could be changing. If you go in too late, you miss the opportunity. You're not there for customers that are expanding across markets. So it's a very delicate balance, and and you know it's a very delicate balance, and a very good case study every day that comes across the CFO's desk, as well as our entire executive staff.
Very cool. Let's talk about. You said during your time you have done a couple of funding rounds. I would imagine it has gotten easier over time for the company to land funding rounds. It perhaps wasn't as easy at the very starting, to be able to raise like a seed or a Series A because the industry itself might not be fully formed, right? And so maybe tell us if you have any, anecdotes from what you have learned about the company in terms of how were the prior or the earlier rounds, and then how kind of, easier or harder or different it ended up in the two rounds that you have led for the company.
Yeah. It's a great question. If I start back to when I started, well, the company had already completed its Series A long before I joined. But at that, from the perspective of my founder at the time, right, who's our CEO. Early on in the industry, there are VCs and investors that are specifically focused on the investment thesis, the long-term investment thesis of cannabis, and they see this as a long-term secular trend that extends beyond the U.S. but with the U.S. setting the standard, and really, 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 it starts with that group, and this invest and these are smaller to mid-size funds, right, that are making a bet on the industry. And at the time that I started, well, we weren't raising capital right away when I started. It was a little bit further down the journey. But at the time that I started, there weren't many traditional investors that had a view on the space just yet. Many of them were still sort of just learning the market, and I think that there was a lot of inbound interest from the standpoint of just pure research, like what do you guys do? What's the market about? What's the overall opportunity? And I think, but it's very clear that in 2019, 2020, that traditional investors were very much in the wait and see type of mode, as well as and just sniffing things out. And then I think if we move into 2020, 2021, there's starting to be some real interest and real diligence that's done in the space. And at the same time, I might just step back and mention the stigma of the industry, which I think has an unwarranted reputation, but the stigma of the industry just from the general population, even in a 5-year time span, has anecdotally has gone down sequentially. Gosh, I want to say at least 30 to 50% year over year, right? And that's anecdotal, but and maybe some of it is just because I'm very immersed in the industry today. But I view that as a very major positive trend, that will overall that will overall guide the how the U.S. thinks about cannabis. And we're still somewhat a ways from federal legalization that's not regulated at the state level. But I see that as a positive trend, and you see that in the investor sentiment as well, right? I think that there were a lot of investors that really want to make a bet in the industry, but don't know exactly how to articulate the opportunity or how to think about it in absence of a federally of a federal landscape, right? And so that's part of the job as CFO is to articulate the opportunity, articulate the opportunity, articulate the risks, articulate the growth path above and beyond just the traditional. Here's what our SaaS economics looks like. Here's our financial. Here's our data room. But the long term thesis is really important to highlighting that. But ultimately, our Canatech companies took a handful of paths with their financing, and there are some that predominantly stayed within the investor network that they know, which is the investors that exclusively focus on this industry. A, B, sort of coinciding with 2021, 2022, SPACs were a big thing. So we did see some companies that, and remember, I said all these are still growth startups, but quite a few companies took a SPAC path, which was a path to liquidity and a path to capital. It unlocked some M&A opportunities for them because of the capital and the transaction. But I think that I do feel that there was a rush, and I don't mean this just for our industry. I mean this in general. There was a rush for many companies to be public, and when you're below a certain scale, you don't want to do that just to do that. I don't think it's not one of those things that you just check the box to check the box. That would possibly be equivalent to getting married to get married, right? I think you just sort of have to find the right person. You have to find it has to be at the right time in your life, right? And so there's the SPACs, and then for a very select group of companies, including Treez, we were able to attract investment from traditional investment investors that were really focused on vertical SaaS, uh, combination of vertical SaaS, fintech opportunities, or traditional software, and they really saw a long-term opportunity in what we were doing. They've been following the sector for probably close to a decade or so, and was just waiting for you know who are the winners are going to be, when is the risk level tolerable for them to make that first investment, where do they see the longer term secular trends going, and but that's all the macro stuff. Ultimately it comes down to which company are you investing in, and that still ultimately comes down to the fundamentals of the company and what the company's track record has been. And we are very fortunate to have built a great SaaS business, again with data assets and elements of fintech that have driven our growth over the past, at the time, 3.5 years, that have led to our Series C and investment. So overall capital raised to date at Treez is about 79 million, and we are proud to be a leader in the industry.
Very cool. I love the kind of the secular trends in terms of regulatory industry, closest to money product, right? You're a POS system, so closest to money, and you kind of really enable the transaction, as well as given the structural um, kind of formulation of the industry, it kind of automatically leads to very low competition for someone like Trees. So super awesome. I would like to play a quick game with you, where you have to choose which one of Trees, Womply, and Rike has the best metric. I'm going to give you 5 different metrics, and you have to choose which company has the best of that metric.
The best metric, as in who had the best number, or
Who
who?
has the best number? Who has the best number on that metric? Okay. So gross profit, Trees, Womply, Rike. Who has the best gross profit?
That would be Rike.
Okay. CAC payback.
CAC payback. That's going to be Treez.
Okay.
We pay back incredibly quickly. Combination. It's the duality of our SaaS and fintech that pays
Yeah.
back.
Yeah. Yeah. Churn.
Churn. Rike.
Okay. Average revenue per customer.
Average revenue per customer. That's going to be Treez. We have a lot of uniformity in our ICP, and we it's and our average revenue per customer is very predictable
And high as well.
Yeah, at Rike, I think we have a lot of SMB, and then we have some enterprise. We had a healthy mix of enterprise as well. So it's more of a wide distribution of deals. So it's the average is less precise.
Sure. LTV to CAC.
LTV to CAC is going to be Treez.
All right. So now I'm curious. You said Rike for gross profit as well as churn. I would have imagined for someone like Trees in such kind of a structural advantaged market, the churn would be quite low, like really like almost closer to the best in class enterprise churn, right? So can you demystify that for me in terms of why would you say that churn is better at Rike versus Trees?
Yeah, I think so at Treez we still deal with a lot of startup, small business operators. Because we sell to retail, and many of the operators are new in the business, and sometimes unfortunately it just doesn't, the actual business doesn't work out for them, and then there's other churn reasons as well, but that's going to stand out as just the small business dynamic of it. Of course, we do have a SMB or transactional element of Rike as well, but those are still largely within larger companies, because it's a project management, it's a work management, work collaboration system. So even if you look at the smaller end of the deals, they're still going to be born from larger companies. It might be like an engineering team or a marketing team that is using the product with, but it could be within a very large organization that has land and expand. So, there's different churn dynamics with that type of profile as well. But uh, small businesses, if you think about just structurally, and just their life cycle, there is a predictable clip of when they go out of business, and that's just part of the environment that we operate in.
All right, I think all that sounds really good, David. Why don't we move on and talk a little about the modern CFO? Over time, you must have seen a lot of different CFOs, and the role has certainly evolved as well. What has been your experience in terms of the evolution of the role of the CFO, and how do you think about the role of the modern CFO right now?
Great question. I think well, by the time I started my career, I feel like most CFOs were strategic CFOs already, right? Other than the fact that they all got hit with massive compliance stuff from Sarbanes-Oxley in the early to mid 2000s. But I think that there's a lot of talk. If you just, whether you read articles or if you talk to a 30-year, 40-year CFO veteran, there's a lot of talk about the transition from like the compliance focused accounting CFO who traditionally came out of the straight from the controller's office, right, to one that's focused on sort of a forward-looking view. I like to say that by the time I started my career, most were already along that continuum of making either they were always forward, they were already forward thinking, or they were in the process of their finance functions were in the process of making that sort of transition, right? So I think that that's very much table stakes. A lot of people I think would answer just that, hey, you need to be, a modern CFO has to be forward thinking. They have to be a good partner to the business, in addition to just the sort of compliance and reporting responsibilities. But I think that both are incredibly table stakes. So I would like to elevate the definition of the modern CFO to really being the nexus point between the company's strategy, its capital investment, as well as operations. And I'll add another element here, which is people. You have to be, in my current role, I also oversee people as well as some elements of biz ops, and the people element of it is something that I don't think a lot of people would necessarily think connects well to the CFO office. But I think I personally think that, at least for me, I think it's really important. In addition to the numbers, in addition to everything else that a traditional CFO normally deals with, number one, it's in almost every company, it's going to be your number one investment from a capital standpoint, from a time standpoint within the organization. So making sure you have the right level of talent, making sure you make the right level of investment in the employee base, and that you're growing that talent, is very, very important. But ultimately, the role of CFO is a combination of making sure that the company can see around the corner in all aspects. That to me stands out as the role of CFO. The company should never be surprised with things that are happening. You should always help the rest of the executive staff and your CEO and your board see around the corner for what risks are coming and how you might navigate against that, and how that's ultimately going to impact our ability to execute on either the operating plan or the company's longer term strategy. You want to be able to see well ahead of the curve. You have to sort of be the most mature person in the room. You're not going to be the most creative product leader. That's a different archetype. You're not going to be the visionary of the company, but you have to help the company see ahead of the corner, whether that's 12 months, whether that's 18 months, 24 months, or whether that's just around the corner on a short-term project plan, whatever that might be. Your job is to help the company navigate that and mitigate risk without without reflexively diminishing the opportunity. Because and that's a delicate balance, because it's one thing to see around the corner and say, like, here are the here are the 75 things that could go wrong, but that's not your job either, right? I think that that's being a naysayer. So you have to preserve the opportunity that is inherent in the CEO's vision and manage that within a certain level of risk, and help the company develop the right goalposts for operationally, and then track to it from a metric standpoint, and make sure that the company is adequately prepared for it from a maturity process as well as discipline standpoint. And that's and you have to navigate that all within likely some very tight resources, just because we are a growth company and we are investor backed, right? So it's that sort of delicate dance that I think is a skill set of a modern CFO, and which is ultimately, you have to capture the opportunity. That's why the company was founded, right? And that's why investors have placed a bet in this company. When they're and every startup has a number of unknowns. Every startup investment opportunity has a healthy amount of risk inherent in it. But so you have to help preserve that opportunity and accelerate it as well, without blindly throwing money at it, and without reflexively diminishing the opportunity. Because I think that, if you don't hit the right balance, then those two are going to happen. You're either going to waste capital, and once the capital is gone, it doesn't come back, right? And or you're going to reduce the scale of the opportunity, and that's not the job either.
I love that. It's almost being the Sherpa, navigating the company to reach its full potential. Makes a ton of sense. Um, Tell us, how has the integration of advanced technology and data analytics transformed the finance function in your experience?
Yeah, it's critical. You really, shifting to internal finance operations, right? Um, you really have to build the finance function, and I think of it sort of as a pyramid. And when I say pyramid, I don't mean a hierarchical pyramid, because we're a flatter organization, and I tend to run things without multiple layers, although we do have layers of management. But I think of it as a pyramid, in that at the very bottom layer, you have to have the operations. You have to have the finance operations. If you don't have that, you're not going to have the accounting. If you don't have the accounting, you're not going to have data integrity. And if you don't have data integrity, you're not going to have the financial. You're not going to be able to do financial planning. And if you don't have the financial plan, and then above the financial planning is analytics and insights. You really have to create a team and navigate systems and data that can compartmentalize that all within that meets the sort of maturity of your business. And I'll call it the current maturity plus give it a 1 year outlook. If you're going to be doing something like an IPO, you're probably going to have to look past 1 year. But if you're not at that scale yet, I think current state plus 1 year is all, and being 1 year advanced of where the median company would fall in your stage, is probably a reasonable benchmark. That way you're not expending too much capital and getting ahead of your skis, but that you're always in a position where the finance function can lead from the front. And that's really what it's about. Because if you find yourself just at the average or behind average, then you're going to want to move. You're going to want to make that investment and move along the continuum, because that's a finance function that cannot lead from the front. That's a finance function that will be giving you information late, They might have one element of the company of the finance function nailed, like they might have the accounting nailed, but they don't have the planning, or that they have the planning, but it's not rooted in great actuals, or that they have financial planning that is very gap based, but it might not have the deep analytics that's necessary to guide the company through the sorts of things that companies go through when they advance their business model or change it or go through transitions. Um, which many startups often have to encounter, whether they acknowledge it or not, right? So really, it comes down to data, but it's not about raw data. It's about insights. So you have to start with what insights you need to run the business 1 year forward or a little bit more, right? Depending on your scale, and work backwards into what systems, what processes, and what team structure would best help you get to that state. And when you're armed with that level of information, you're going to, along with good business judgment, you're going to be in a position where you can help the company see around the corner, where you can help them identify opportunities, where you can help them mitigate unnecessary risk, not all risk, but unnecessary risk relative to the business strategy. um, and if I break it down into several components, firstly it's the team. It's not even the systems. It's not even the reporting systems and the ERPs and all that stuff. I think that you know I've gone through dozens of system transitions over the course of my career, and I'd like to say I probably have like a 80% success rate. Some systems are oversold, but I really think that it starts with the team that you have, and that the team that you can build and grow um, over time. A really solid FP. This goes without saying, but I mean a really solid FP&A and accounting and accounting personnel. If you have those two functions nailed, you're probably, I want to say you're probably 70% of the way there. And then from there, it's your systems, it's your processes, it's how you choose to architect those systems as well. I think it is very important. I think that a lot of finance professionals sort of jump to the reflexive answer is, we need systems to do all this stuff. Well, yes, you do. You absolutely do. But have you dived deep to understand the problem, right? That you're trying to solve, or is the reflexive answer that some magical software solution is going to unbox and solve your FP&A or your accounting close or your payroll problem or your HRIS problem? Because I think if you reflexively jump to that, you're probably going to get it wrong, whether it's from a strategy level or whether it's from just basic day-to-day operations. And so I actually, when I make an investment in systems, I go in hard and heavy. But leading up to that point, I forced a manual process for just a little bit longer before I make it. And then once I make that investment, go all in, but forced to process the manual process long enough so that the real gaps and the real problems are really, really well understood. And it can be, and that applies to everything that you're solving, whether it's the company-wide ERP, or whether it's just a sub-module for, pick a topic, travel and expense, or accounts payable, or revenue recognition, right? Well, revenue recognition is pretty important, but pick a system, whether it's the entire everything under the sun, that's sort of your entire finance stack, right, and how it connects, all the way down to these sub modules. Make sure, I think that CFOs are really well served if they force that conversation within the organization of what problem they're really trying to solve, to make sure that that systems and infrastructure actually do support the business, and it's beyond the it goes beyond the PowerPoint business case.
I think your point on people preceding the systems is quite interesting. Tell us then, as a leader, how do you foster a culture of innovation and accountability within your team?
Yeah, yeah. This ultimately, you want to hire great people who are motivated to solve problems. But I think that I personally try to make a big investment in every person in my team, and make sure that direct reports also do the same with theirs, on in terms of developing their career, as well as above and beyond managing the day to day. You really want to help them, from especially those earlier in their career, from a learning standpoint. And by learning, I don't just mean that you go out and send them to a bunch of different trainings and make them read a bunch of books like they were still in school. Although you can support, you can support a healthy amount of that as well. But really show them how you solve problems. Ask them questions, force them to think through the hard parts of their job, how they can make their job better, how they can make their job easier, and make them reconcile decisions that go back to the company's overall business objectives. I think it's pretty easy for a lot of people in traditional corporate or G&A functions, whether it's finance, accounting, HR, IT type of functions, to think within the scope of what they're doing. But ultimately, you have to be a good business partner to the rest of the organization. You have to be able to influence them in a forward way, and to do that, you have to have a very good understanding of the business. So every decision, try to make people think back to how their decision reconciles to not just the process problem that they're trying to solve at the moment, but the larger business, right? How does their decision impact customers? How does it impact employees? How does it impact execution? Does it, how does it impact risk or growth, right? Think through all those different things, and over time, I think if you find that you make that investment, you're going to have a team that makes pretty good decisions, and probably tells you a lot of things that you should be seeing yourself. So there'll be some natural meeting at the minds, and and everybody will sort of complement each other in that way.
Makes sense. Let's move to a hypothetical. Let's assume that today is my first day as a CFO at this company. What would be your advice to me on my first 100 days plan?
My advice to a CFO on a first 100-day plan, you know, firstly, I tend to not go around telling people that I'm brand new, even though it's obvious, right? If you're in your first 100 days in any company, most people will know. But I think that I think you want to again, it's a balance, but you want to put yourself in an advisory position to the rest of leadership as quickly as you can. And I don't mean that you rush to things, and that you don't take the time to understand something, and that you just kind of go in and start telling people what to do. But it's really important that, firstly, that 100 days, you should probably scale that down to 60. That's my advice. But I mean, mechanically, what do I do? Aside from meeting people and talking to people and getting to understand the business and so on and so forth, I will go in, and it's like my rule of 10. I'll explain what that means. Go pick 10 sales contracts, pick 10 offer letters, go pick 10 T&E expense reports, go pick 10 performance reviews, go pick 10 of anything out there that might be important, and just read it. it's not going to take you 100 days to do that. It'll take you about 3 hours. So it should be something that you can do in your first week, and that'll really give you a flavor of, hey, like, does the company overspend? Does the company have a lot of weird deals on the sales side? Or do we have the right talent? Do we have the right um, controls? Have we made the right decisions in the past? Where have we missed? Right? I think that's a very quick first 5 hour thing of your job that you can do above and beyond. Of course, I'm trying to explain this in a way that gets beyond the obvious, like sit down with your colleagues and and understand what they do, because of course you're going to do that, and that stuff's table stakes, right? I think um, you want to understand as quickly as you can what you can do to help the company see around the corner, and that's going to be different for different companies, but your job is to unpack that, because when you interviewed for a role, if you're interviewing for a CFO role, you have to think in some ways like an investor, because you're making an investment in yourself for hopefully an indefinite period of time to put this company on the path to success. So while you're not putting in financial capital into the company, you're putting in personal capital. The same could be said about every other employee of the company. But as CFO, you're going to have access to a level of diligence to join a company as as an investor would. So, if you've probably already gone through that diligence process by the time you've signed that offer letter, and if not, you should have. So that's what I think is really important. Was one to that you made an investment in this company. Okay, not a financial one, but you've made an investment in this company. How can you, and that's based on certain fundamentals. It's based on a certain strategy. It's based on a certain vision. How can you help the company unblock that as fast as you can? And so you want to understand, in your first 100 days, you're going to want to understand, what paths you can do to unlock growth. Are there any major governance or compliance things that you need to get ahead of? Because if there are, and if there are, and you don't get those cleared out of the way, then that's going to block any opportunities that the business had. That's going to block upside. So you want to make sure that you're checking those boxes. You want to build great relationships with your executive colleagues and people, um, you know, throughout the ranks of the company, inside and outside of finance, because you need to hear things. You need to hear things, not so that you can be nosy, but so that you can get ahead of the problems and so you can solve them in the strategy. You need to figure out what are big problems and what are small problems, because for sure there will be issues, but your job is to sort of prioritize and stack rank which ones you're going to address and how you're going to build that roadmap and have that communicated well ahead of the first 100 days with a certain level of precision. So to me, I like to make it the first 60 just so that I can have a very clear impact. I sort of feel like if the impact it isn't felt until like month 4, month 5, then you know you sort of might lose a little bit of ground. Don't make quick decisions, but you own getting yourself ramped as fast as possible, and your ramp period should be shorter than longer, especially given the level of diligence that you should have done prior to taking the job.
I love your rule of 10 and thinking like an investor before joining the company. I'm curious though, what kind of diligence is acceptable before joining as a CFO?
Yeah, I think your typical data room, right? Typical data room is is probably acceptable. You're going to have gone through interviews with board members. You're going to have to gone through interviews with of course the CEO and other executive staff. So I think that your ability to probe and ask questions is is critical, and some of that is learned over time. Um, but really, I think you really just want to understand where you can help, and what problems are solvable, what problems are not solvable, and approximately over what time period and with what capital investment, right? But in terms of actual, like, what you should be looking at, I mean, you should be looking at financials. You should be looking at one level beneath that is just the company's execution plan, how they've been meeting their internal goals, like their internal OKRs or MBOs, execution priorities, understanding, where the company's missed before, where they've tended to succeed, um, you know, that type of thing. Making sure that and then of course there's always the basics, like making sure that there's no major outstanding legal matters, that type of thing, right?
Awesome. What would be your advice for young professionals who want to be a CFO one day?
A lot of I think that I don't think there's necessarily one or two or even three paths. I think that the role is dynamic enough where CFOs can come from a number of different backgrounds and early career paths. I outlined what my path was earlier in the call. I certainly by no means think that it's the only path. I think that there are many great paths, more than ever, to the CFO seat today, and I think that's a good thing, because the role can be as wide and as deep as it needs to be within the organization, and that's going to come with a lot of different skill sets. The only thing I would say is to make sure to focus to go beyond the numbers. But as I mentioned, I really think that that's table stakes today, right? I would say that go beyond the numbers, but make sure you have that solid grounding in the fundamentals, whether it's corporate finance, planning, corporate governance, accounting. You can always hire great people to support you, but you have to have a certain baseline of fundamentals that you can always rely upon, and um, you know try to get yourself focused on the company's strategy and how it operationally meets its numbers as well as you can. It's not just knowing the numbers and what they are, but how does your organization go about meeting its numbers, right? Top line, how does it meet its OpEx plan? How does it meet, how does it think about investments? How does it think about M&A? You want to really understand how it executes well in all those key areas.
All right, makes a ton of sense. I think we are up on the time, so I would love to move to a lightning round. That should be quite fun. I'm just going to ask you some quick questions, and all I want from you are immediate responses.
Sure.
All right, let's get this rolling. Let's start with something simple. Sweet or savory?
Savory.
Books or podcasts?
Books. Sorry.
Thinker, no worries. Thinker or doer?
Doer.
Introvert or extrovert?
Introvert.
Scotch or whiskey?
Neither.
Oh, so what's
Wine.
your guilty,
Wine.
guilty pleasure?
Coffee.
Wine. All
Coffee.
right.
The my If it has to be alcohol, wine, but really coffee is my savory.
We'll go with coffee. um, how does someone impress you?
Authenticity.
Very cool. If not a CFO, what would you be?
Um, I would be well. I mentioned early on I'd probably have gone down some strategic marketing path.
All right. If you can be CFO of any company for a day, which company would you choose and why?
The one I'm at now, and I don't mean that in a cliche way, but the reason why is because it's such a changing market that there's something that intrigues me every day.
Yeah. So the next one, if you could teleport yourself right now, where would you go and why?
Yeah. Well, if it's a time, I would go. I would probably go back to when my parents were born. I would just. You know, I just over the course of my life, I've had many great conversations of just the evolution of the decades, and I would love to see what journey they went through in their time period to get to where they are today.
Number one item on your bucket list right now.
Number one item on my bucket list, I would love to take a month and drive across the country and visit each state along the way.
All right. If you could uninvent something, what would it be?
My phone, because I can never keep up with all the people calling me.
Okay. Who is your role model, personally or professionally? Could be any.
It's always been my father.
Okay. One thing that can make you 10 times more productive.
10 times more productive. Well, Chat GPT.
All right. The last one. Describe yourself in 3 words.
Curious, determined, and a builder.
All right. Super awesome. David, this has been an amazing show. Thank you so much for taking all this time and sharing your journey and your thoughts. I think this is almost like a masterclass on the Canatech side of the house. So thank you so much for all your views. Appreciate it.
Thank you so much for having me, Rohito. It's been a pleasure.
That brings us to the end of this episode. We hope you'll find at least one nugget that is beneficial to you. As always, thanks for listening to Strategy of Finance. If you enjoy the show, please rate and review us on YouTube, Apple Podcast, Spotify, or our website, www.strategyoffinance.com. Your comments will make us better. You can also follow us on LinkedIn and Twitter and share the word in your network so other people in the finance community can also benefit. Be sure to tune in next week for another engaging conversation. Until then, this is Rohit Agarwal, and remember to learn, grow, and inspire.